Coca-Cola shares on the move on the back of its earnings, with the beverage giant proving that higher prices hasn't deterred customers from its popular products. Coca-Cola President and CFO John Murphy joins us now. John, it's been a while. Welcome back to Yahoo Finance. Good quarter. Market seems to like these results out of you. And what really stood out to us, it looked like the first signs of disinflation in your commodity costs. What are you seeing on that front?
Morning, Brian. Nice to be back. We're seeing in the first part of the year, we'll see a continuation of the elevation that we had carried through from last year. And we see some easement in the commodity front as we approach the middle end of the year. And so our thesis going into the year is that there will be some easing as we get into the second half of the year.
John, it's Julie here. What about your pricing? I'm curious. We've seen so many consumer products companies take price increases over the past year. Do you expect to continue to do so as we head through 2023?
Well, our starting point, Julia, is to earn the right to price. And so having a very strong marketing and consumer-facing agenda is our first priority. And from there, then, we adapt to market conditions all around the world. So we have taken pricing throughout 2022 on a very measured basis. We'll have some of that following into this year. And as we look to the back half of the year, that I would expect to moderate and to get back to more normal levels.
How are you changing the cost structure right now, even as you monitor where consumers are willing to take price and perhaps in categories where they're not buying as much?
Well, our cost structure, we took some actions coming out of COVID, and we have not been waiting around to right-size our business, to right-size our portfolio, and to make sure that we have a fit-for-purpose model going into 2023. So we feel good about our overall cost structure. I know working with our bottling partners, they have also been taking a lot of good actions to continue to deliver on both the top and the bottom line.
I know Coke really restructured how many products it was selling. That, I believe those efforts started early last year. I mean, I'm looking at the tea results, a little softish in the quarter, but are there other areas in your portfolio that you can fine tune, or you happy where the brands are in the portfolio?
You know, we're always discontent, Brian, and there are some categories where we've had some sluggish performance, I will say, but overall the portfolio and the fine tuning that we've done over the course of 2021 and 2022 is paying off. We are investing, I think, in the right areas. And we have, most importantly, we have our system focused on those brands that we believe have the greatest potential going forward.
We're just looking at a graphic here of your unit case volume across the different categories. Overall, unit case volume was down by 1%. When do you think you'll see reacceleration of that, and what do you think could trigger it?
So we actually had underlying volume growth in Q4. The headline number takes into account the impact of our suspension in Russia and also the impact of COVID in China in the fourth quarter. So Q4 was actually pretty much in line volume-wise with Q3. And we're seeing, as we go into 2023, we're seeing that momentum continuing year to date. So we're seeing some volume growth into the year. And over the course of the year, as we look from a global perspective, we expect to see baseline volume growth continue into the middle of the year.
And John, can you walk us through your plans this year for the alcohol category? I know you have a lot of things popping there. And is it safe to say that push into alcohol is no longer just an experiment?
It's there's a lot of white space out there, Brian. We believe that we have a right to both compete and to play in that space. And we're exploring. We're exploring in a number of areas. We're learning. We're seeing some good traction with Topo Chico Hard Seltzer, for example. It's well embedded now in the business in the United States. We've got some exciting initiatives in the pipeline for this year. Jack and Coke will launch in the United States at the end of March. And so it's going to be a cumulative impact of a number of initiatives that I believe will give us the wherewithal to see this as a material source of long-term growth.
And within those initiatives, I mean, look, I love a good sugar rush as much as the next person, but when you think about where customer trends are pointing right now and taste profiles, where they're shifting, how does that prompt Coca-Cola to lean into certain categories, those that you were just mentioning even, versus some of the more historical parts of the brand?
Well, our best launch in the last, I'd say, 20 years has been Coke Zero. It continues to enjoy double-digit growth around the world, and it's just one example of a significant focus we have on promoting and selling low, no-calorie offerings in all of our categories. So it's a growth area, one we're intensely focused on, and we think there's tremendous runway ahead in that space.
John, we talked to the CFO of one of your largest competitors last week, and they told us they have reformulated their zero calorie or zero sugar formula drink. Do you have any plans to do something like that?
Well, we've had Coke Zero in the marketplace, as I say, for over 20 years, and we've learned as we go with the consumer. We've had a number of improvements. We love the formula we have in the marketplace today, and we look forward to another very, very strong year ahead.
Just looking across the sports category as well, sports drinks grew 1% for the quarter, 8% for the year. Where do you see even more opportunity within the sporting environment, knowing that for athletes, for the performance, performance files out there, I guess, that are looking for that response from their beverage that they're engaging with through sport or even after to recover? Where do you see new opportunities to either add on to the brand or just build more in-house?
Well, we like our portfolio of brands in the sports category in the United States with Body Armour and Powerade and overseas with Aquarius. And we see a lot of runway ahead. Body Armour is a new acquisition. It's coming off a challenging year for a number of reasons, but we're excited with the innovation pipeline. We're excited with some of the packaging we're bringing into the market. And then Powerade has been a fantastic core to the portfolio, and I think the two complementing each other in the United States will help us in the year to come. And as I say, overseas we've got a number of other brands, and the name of the game is to continue to follow the consumer, to understand where they're looking for edge, and then to be able to provide it with the innovations that we're bringing to play.
John, just lastly, I'm glad you mentioned packaging, because within this report you even talk about some of the packaging goals that the company has. I mean, we're talking about plastic bottles at the end of the day and some glass in certain elements as well, too. All of that considered, from your perspective, for Coca-Cola to get its sustainability efforts right, what would you need to see within the company, and what would you determine a win?
So, not having waste is a business imperative for all of us, and we are embedding that into our business agenda. It's not a separate agenda. It's all part of one overall agenda to drive growth, but to do it in a way that works for all. And so for me, it's to see our business leaders embracing and building it into their operating plans, and to demonstrate that we can grow the business and yet deliver on the objectives that we have publicly outlined.
All right. From this Cherry Coke fan, I just want to say thank you for joining us here this morning. Of course, all of us, thank you for taking the time here. Coca-Cola CFO and President John Murphy here on Yahoo Finance. Thanks so much.